Hi, everybody. How's everyone doing? Ren, Ziggy, lumber. Yeah, it's still 700 bucks. It's a pretty thin market. It was even when I was on the floor. They traded at open outcry. Zig. A lot of games in that lumber pit. Hi, Brock. Alexander, everything's fine. Hugo, how are you? So good turnaround Tuesday to everybody. I'm taking a shot at silver. I'm short from 27.50. I'm risking 25 cents. Any turnaround Tuesday trades that you take? Hi, Arena. Bill? You want to be out before the Fed? Okay. So I'll be flat before the Fed. Carry it at the most into tomorrow prior to Fed. I'll be looking to take some partial profits when I'm up, say, 20 cents or so. The 2-day off number is down around 27.20 right here. Let's see, right here. What's this? 2670 is a 2-day off number. Must have been looking at something else for, oh, I see. All right, I was looking at just a 2-hour. So we'll see gold. I mean, you have all these triangles. It's a day of triangles. Shana Tova, Mira, L'chaim. So Euro, I don't know. Pound looks like this just ABC. I'd like to see one more low in the pound to maybe take a scalp there. So here's 1-year triangles. It was Blake called this formation, and we had a breakdown. It tried to hold it yesterday. How do you measure a target for this? You would just take this high, which is call it 107, and this low 520. So say 180 from the breakdown. Call it be about 103.80 would be a measured move down here. Would take out this low. What's this low here? Yeah, 418. So the measured move would take this low out right here. Okay, and you have the other triangle, which was supposed to be a descending triangle in the gold that it broke out of. As you can see, this looked like a false breakout. Looks like Goldman was right. Blake said down here Goldman was buying the gold. So here we are. I just went with silver. It had a little weaker look to me. We'll see. I could get run over with that. S&Ps, nothing yet. Maybe a fade after the Fed. I want to keep some cash. I want to be flat before the Fed to react to the Fed. As you can see by all the action that we're getting here, everyone's looking for a dovish Fed. So, you know, what's that mean? Weaker dollar, which we've had this week, stronger metals, and risk on. So all of that's happening into the Fed. We'll see what happens after the Fed. You know, it could be like when you buy a stock in front of earnings, and you know everyone's expecting very good earnings, and markets rallying into the report. The report comes in, it pops on the number and turns into buy the rumor and sell the fact. So we'll see if what the Fed does this week is similar. If it is, there'll be a good short in the S&Ps. I think there will be a short in the S&Ps because, you know, we only have 2 drives here. 1, 2. Anyone know what 61.8 back is? I didn't get it on my tool, but maybe we won't even get there. But when I look at this, it looks like 1, 2. Let's see if I could extend these out. This is just a speed line, internal line, give you around 3260, and this line right here is going to give you near 3200. If that happens, I still think that there's going to be one more decline in the S&Ps. It's just from where, and part of it is, you know, Jerome Powell, when he made his big speech or appearance on 60 Minutes, talked about what we had to do fiscally, and the Fed can't do it all. So I really don't think we get a more important turn is based upon maybe Congress finally does something, puts together some kind of deal. It's only September. There's still time, and maybe the market sees that what the Fed does isn't enough, and we get a sell-off in the market, and then our representatives act. So that's something I think could happen, but I don't think it'll happen until we're posting new lows. And this, you know, a lot of people are looking at 3,300 as a big level, but you know, when I look at the S&Ps here, 3,200 still a real big level to me. You see this 32 pulled back to 32, so 32 is a big level, maybe gets tested. I took a shot on the long side of crude. I'm already out. I don't know why my chart is doing that. And here's the Dixie, pretty negative week so far. And if the dollar is going to keep going lower, we held the 50% level. So if this is just A, B, C, maybe we're heading back down to 92.46. I know a lot of people looking for new lows in the dollar, and that would make the big battle ground down here around 90, 89, 80 down here. We'll see if the dollar is that weak. And want to remind everyone about what we have going on here for you to get involved with us. So we have our semi-annual sale here. And with this, you get everything. It expires, so you have a couple of weeks, less a day to do it. And then I want to remind everyone about what's happening with our trade summit too. Don't forget to sign up on that. Do I use log mode? I'm not even sure what I use. I just, you know, auto. I go to auto on it. It's hard to see this with all the fibs. So those are my thoughts for Turnaround Tuesday. Remember, anything that you do, you know, try and be flat by tomorrow. And if you have day trade profits, partial profits, take it. Gold's still making new highs. Silver's attempting to right now. So Blake, how you doing today in front of the Fed? I think it's a 2-day meeting starting today. What could they possibly talk about for 2 whole days?
How they are going to be more dovish than they could be currently right now.
Yeah, how they could beat expectations for dovishness.
Yeah, like how do we downplay the economy even more and try to increase inflation expectations at the same time? You know, which is the big trick that they try to do. So so we'll see. You know, we'll see what happens. Yeah. So you know, right now the dollar is just, you know, pushing some support levels. I think we've seen the dollar push, you know, basically to really key support. And I was reading this one of these analysts that we follow, what the firm that I trade for follows, and he was like, and this is interesting that he said this. He's like, yeah, I've gone back, for months trying to find some bullish US dollar, analysis piece from some analyst. And he's like, I just can't find any. And when we were putting together the Trader Summit, but by the way, here's the Trader Summit. If you guys haven't registered yet, let me go ahead and put this on the, I'm going to put it in the chat so you guys can have it. Okay, here you go. Okay, so if you guys haven't registered that, make sure you register. So when we were putting together this, this group of, matter of fact, we were trying to figure out for the actual debate here, trying to find a dollar bull. It was hard. We were going back through like people's comments, their analysis, going, "Now, is anybody a dollar bull here?" It's hard to find. It's hard to identify. And it's funny because when I was reading that piece this morning, the guy's like, yeah, I searched my inbox and I couldn't find anything. He's like, I found one thing a couple months ago where, some analyst was like, I'm ready for a dollar bounce, and then followed it up with a bearish dollar piece of analysis right after that. And I was like, that makes sense. I mean, everybody's bearish the dollar. And here, I'm going to give you the best comment that he gave. Let me see if I can find it. The best comment that he gave, which is a Mark Twain comment at the very end, he said, and I'll just read you the last sentence. And this is something we subscribe to, so I can't give you all the information of who it is. But as the case over many decades now, the famous Mark Twain quote remains highly applicable when it comes to the US dollar. The reports of my death are greatly exaggerated. Instead, it's the US dollar hating zombies who will once again find themselves back on life support machines in short order. The death of the US dollar crowd looms large. And I found that really interesting. And he basically his take is, the market's extremely bearish, the dollar, and positioning, as most of you should know, positioning is very, very skewed to dollar bears. Everybody's bullish the euro. Let me see if I can pull this up this is from Citigroup yesterday. Give me 1 second. See if I can find it for you guys. I deleted it already. Sorry. Citigroup, their positioning indicator shows that the market is extremely long. Kiwi, Canadian, Aussie, basically emerging market FX. So everybody's very long, the Aussie here, the Kiwi, based on their positioning, and Citigroup has a pretty big, pretty big wingspan when it comes to FX. So, when they show the market very long, these commodity currencies, you got to be a little careful, especially going into tomorrow when everybody's expecting a dovish FOMC. So that's, again, I see why everybody's leaning on the dollar right now, but if the market, if the expectations are not reached tomorrow for a dovish Fed, we could see a dollar bounce. We could definitely see some equity market weakness as a result. Now, the only currency that would be a little different that may not show dollar strength, if we see some dollar strength, would be the US dollar Japanese yen. So let's talk about the dollar yen for a moment. This is the daily chart of the dollar yen. If you guys did not catch the dollar yen breaking down yesterday, that's something that as ForexAnalytix subscribers, that was an active pattern in play that went in yesterday. All right. Whoops, don't want to do that. you can see we broke down as we cleared the 105.80 level, and that is resistance today. So the dollar yen resistance is 105.80. Bearish target right now is 105.10. And below that, there's other support too, but 105.10 is going to be these lows here. And then below that, we're talking, you know, back to 104.50, 104.60, which is continuous support of the dollar yen. And then below that is 104.20. But focus today is, especially with this bear flag that's in play. And again, if you use ForexAnalytix, you got this analysis about an hour ago. Bear flag was forming. There's the 4-hour chart an hour ago. And we've dropped, you know, about 20 pips since then. But you can see that this bear flag points to 105.10. So that seems like where we're going. Might even go there this morning, you know, before hell. We could get down there before I'm off of this webinar, because that's the thing about the dollar yen. It can move it can spike pretty quick, you know, if it gets moving. So anyway, that's the bear flag that's developed there. Let's go into all these other currencies. Let's get the analysis out of the way. So here's the euro. One thing about the euro is we're approaching that 618 retracement again. This is where we rejected last week. We're gonna mark up 119.10. I think we wrote that down yesterday. 119.10. One thing that you got to pay attention with this euro dollar, especially if we start to roll over here, that we'd make a lower high, and that is something that I think is worth noting today. Now, as far as support goes, oh, this is something that I've got to say this. I saw a daily FX analyst, looks like a young kid, you know, like, yeah, when I say young, anybody less than 40, maybe, you know, younger than 40. But, you know, he looks like fairly new on Twitter and looks fairly new in life. Anyway, he was writing this. I think he was doing it regarding the Aussie, but I'm going to just make something clear here. Okay. Head and shoulder patterns are not continuation patterns of a trend. They tend to be reversal patterns. So, you know, from after a long elongated trend. So when you see, you know, stuff like this, I get a little weary of people that start looking at like this euro dollar as an inverted head and shoulder pattern. So I just think we're respecting the 618. Can we go up to 120 again? Sure we can, but I'm not going to measure it as a head and shoulder pattern. I'll probably look for a failure up around these highs, like around the, you know, 119.80 if we do scale into new highs. But for now, I do think that support today will be at 118, and then below that will be 117.50. So as you guys know, this is very important support. Let's go over to the cable. So the cable, we are pushing right up against this previous, this is the underside of the broken trend line, by the way. That's that multi-month broken trend line. We're back at it, but we could, because the cable's being altered by Brexit news. So, you know, the pound could obviously spike up for no good reason other than some comments being made out of, you know, the UK. So I wouldn't put it past the cable to rally to 129.75, which is going to be that previous support level. Oops. Okay. Support 128, 127.60, but I'm more concerned with 128 today. Oops. My typos. Okay. This is on the verge of going bearish, just so you know, because I know we're up today, but you know, we break through this 128 level, and I'm going to, you know, turn bearish again. So it's FYI. Aussie. So the Aussie, remember, this is previous channel resistance that's coming up like shortly. We're at the 618. We could quite possibly get to 73.50 today. We are range bound. We are an ascending channel, so just keep that in mind. It's just very frustrating to trade the Aussie right now. Support intraday should be 72.50. Now remember, guys, we've gone from bearish US dollar bias charts to, you know, flipping a lot to range, which, you know, tells you that the dollar move is probably a little extended. You know, just think about the evolution of these bias charts over the last couple of weeks. We were like this 2 weeks ago, right? Yada, yada, yada. And now we're everything's kind of flipping back over to range. And so that's telling you how, you know, the market's probably a little done, you know, as far as the dollar goes, based on what we're seeing. Kiwi, again, range bound, ascending channel, should find some resistance up here. We surpassed the 618, but look at all this previous support down here. So that's going to come in at 67.50. Support at these little spike lows here, 66.43. So it's at 66.50. So look, 67.50, 66.50. Not great, any great resistance, not great, any great support, but you'll probably find some resistance up there, and you're going to probably find some support down here if you know, make your way up here or down here today, especially ahead of the Fed. Dollar Canadian, we have trendline support that came in play overnight. That was, you know, supported at, basically you got to look at this 130, 130 is going to be support. You know, if you try to get short the dollar Canadian down here in the 30s, 40s the last few days, you just got that trade shoved up your rear end. So, you know, you got to be really careful, especially as we've broken out of this big down channel, right? We are finding buyers now. And so while we trade above 131, 130, it's hard to be bearish. Now, it's hard to be bullish too, because we have to surpass the 618, which would be, you know, that would be 132.10, but which I don't think we're going to do today. But, you know, again, we're range, but we are on the verge of flipping bullish, especially if we start breaking some of these highs here. You know, and then you got this, you guys know that I'm looking, now this is a good example technically of an inverted head and shoulder pattern. An elongated downtrend, now building a base, and it's signaling that we got a, you know, reversal brewing. So if we get above 132.50, especially 133, which is previous support here, this dollar Canadian turns bullish. I mean, we should, you know, rally towards the 200-day moving average, which will be, you know, 135 or whatever. Okay. All right. But that's not happening today. So I'm just giving you more of a longer term view. Peso. Now the peso just hit, if you guys missed it, this is the analysis from an hour ago. Dollar Mexican peso. The US dollar Mexican peso is nearing the 127% extension at 20. Oh shoot, that was supposed to say 98. I typoed it. 89, but you can see it on the chart. 127% extension, should bounce from there. Relative strength is divergent and oversold. Okay. So we basically hit, we went slightly below it, but you can see we're hitting the 127% extension right now. Divergent relative strength that is oversold intraday, which might allow for a bounce. I do think that we're going to find some resistance on any bounce, but that doesn't mean that what that hopefully prevented you from doing is getting short down here. So FX trader, are you bearish the euro US dollar, Blake? It's still bullish. You're one of the few US dollar bullish analysts I see on Twitter. You know, maybe you haven't been listening for the last few months. So let me go ahead and explain myself to you, because you listen here most days, but you don't really listen, I don't think. I'm not bearish the euro dollar. But it doesn't mean that I'm not bullish the dollar against other currencies. I've been bullish the euro since we got that euro finance ministers put together everything for the COVID relief. I'm actually more bullish euro crosses than anything. But do I think the euro dollar can come down? Sure. Yeah, I think everybody's very overweight euro. So I think the euro could very easily slip below the 117.50 level, trade down to 116. I'm going to buy the crap out of it down there. But that doesn't mean I want to be short. So did you hear me? I just want to make sure you're actually listening to me. And I'm done speaking to you. Thanks. Okay. Let's go to the Swissy. Let's go talk about the Swissy again. 90.50 is going to be support, as we've been writing down, and 92 is resistance. So nothing's changed here. It's still bearish while we're below 92. So while we're below 92, you got to stay bearish. And matter of fact, while below 92.50, I know you guys hear me say that every single day, but that's that. US dollar, Norwegian krona. This is another currency pair that if we're going to start to squeeze, if the dollar squeezes, this is where the squeeze point happens, as you guys know, above 920. Now, this is one of those that's setting up an inverted head and shoulder pattern. I talked to one of the guys in my office. He's been trading the Norwegian krona since he was at he's been at a couple different banks, but when he was over at trying to think of the Japanese bank, 10 years ago, he was really heavily trading Norway.
Mizuho?
Huh?
It wasn't Mizuho. No.
Nomura. Nomura. Yeah, he was with Nomura for like 10 years, and then before that he was with Lehman. And he's always focused on Norway, and so whenever I have a Norway question, I'll talk to him about it. Probably one of the smartest guys I actually know, from an analysis standpoint, just a great guy. Anyway, he knows a lot of his buddies are currently hiding out in Norway. They're long the crown, and they're aggressively long, and they have been since up above 10 type of thing. They've just been leaning on it. So he's like, man, I know a lot of people that are hiding out right here. So you got when you know that, you got to think of where's their pressure point. At what point do they go, crap, I'm wrong? And my opinion is it's above 920. That's where where you get the natural squeeze point. So will it take us back to 10? Who knows? I mean, you'd have to kind of see what's happening at that point in time from a risk aversion standpoint. for some reason, like part of the global economy goes back on lockdown this fall, I mean, shoot, we're going to get major risk off. You're going to see the, this spike up to 10 again. But, under normal circumstances, if, we start to see a little bit of risk off, I mean, yeah, you were going to squeeze above here. So that's big resistance as far as I'm concerned. And this is a big head and shoulder, inverted head and shoulder pattern that's still developing. So support is at 892. I'm going to finish this up, let you guys go here. 920. And it's not bearish anymore. We're building a base. Now that doesn't mean that we won't turn lower again. That doesn't mean that we won't turn lower, but I wouldn't want to be bearish down here, not after this big of a drop. Is it time to be a buyer? No, but I doubt I'd be a seller just yet. Probably after, if the Fed gives us reasons to be, then I might. Okay, let's go over to the dollar index. Dollar index, while we're below 94, we have to stay bearish. Okay. Again, this is very similar to the Norwegian krona. And if you look at, where this is support, and we probably marked it down yesterday, the same place, right? Well, let's find out. What did I write yesterday? I'll tell you. 893, 920, same stuff. Oh, that was for Norway. I'm sorry. Dollar index yesterday, 92.70, 94, right? 92.70 right here, and 94. But what I did is last night I redrew this trend line right here, and you'll see it goes right through the highs there. So really, we should be watching 91 or 93.40. Whoops, that's not what I wanted. $92.70, 93.40, then 94. And while we're below 94, it remains bearish. But look at all these other currencies that are starting to turn back to range. That's why you have to be more careful now. Dollar Mexican peso, I think I went over that for you. 20, 98, 127% extension, pretty important support. But the dollar mex, you got to stay bearish while it's below 2120, but definitely below 2150. So, whoops. Let me kill this. I don't need this one. It's from yesterday. So this is 2120, 2150. And this is bearish. Gold. One of the things that I am a little worried because I'm short the dollar yen yesterday from 77, 78 right here on this breakdown here. One of the things that makes me a little nervous is I look at gold and yeah, I know gold's, making some headway here, but I will get nervous if it starts to turn lower. All right. So for now, resistance is at 1995 and support is at 1905. So, and I know we had support yesterday at 1900, but you guys know that basically this is really key. And we'll just keep it on bullish while we're above 1900. As you guys know, that's kind of where we have to be. S&P, last but not least, now I'm going to pass it over to Steve because I hear Steve is here. So we're at the 38% retracement. 3,300 is support. 3420 is what we wrote down yesterday, I believe, but it's actually 34.5. 34.25.
You know what's interesting about the gold, Blake, is that, why you need a telescope once in a while is
What's
that
that?
the high close in 2011 was 1912, which 9 years later becomes important, which is kind of interesting, isn't it? That something that happened that long ago is an important level in play in 2020.
Yeah.
Just, a little market tidbit.
All right. Well, Dale, Steve, Stelios, how you guys doing?
Good morning,
Mate, how have you
everybody.
been?
Hey.
Good morning.
Oh, look, I got everybody to speak at once. How you guys doing?
Hey.
You ask everybody to speak, and
Now
you get
we're
everyone
laughing
speaking
at
once.
And that's what you get. Okay. Well, I'm gonna let you guys all talk amongst each other, but I did put the Traders Summit link in the description, so make sure you guys sign up because, again, I'll reiterate, if you want to listen live, you got to get your seat, because once we're filled up and you try to log in and then you can't log in, you're going to be irritated. So you might as well just get it done now. Also, if you guys are not ForexAnalytix subscribers, this is the time to take advantage of the seasonal offer. Stellies, did you put together the tweet for our little giveaway?
Not yet. We'll do it today.
Okay, so today or tomorrow, and I'm not going to be here tomorrow because I'm going to be up really late tonight doing an event for an Australian crowd. So unfortunately I won't be around tomorrow morning on the Face webinar. But make sure you guys retweet that link and then tweet at the ForexAnalytix Twitter handle, saying that you want to be in the giveaway, because we're going to give away 3-month subscriptions for free.
Wow.
All you have to do is retweet the tweet, and then you guys will get also gear, like a t-shirt, mug, mouse pad, all that fun stuff. So make sure you take advantage of this offer, because we hadn't done an offer in months and months. So take advantage of it. All right, guys. Well, I'm going to pass it over to you. You guys have a great day. Good luck today.
Good luck today, Blake.
And by the way, Didier just asked, what do we have to do for the giveaway? All you have to do is retweet our tweet at ForexAnalytix and say, I want to be part of the giveaway. And even if you're a subscriber, and if you win, obviously you'll get the gear, but we'll add 3 months to your subscription. So automatically. All right.
Thank you, Blake.
Thanks, guys. Have a great one.
Good
Good
hunting,
luck.
Blake.
Thank you, mate.
I'd like to throw something into the ring. Anyone that Stelliosis is, anyone that takes a 1-year deal, I will play a live performance of Useless Leverage over Skype to them.
That's got to be the clincher.
Huh? See, NG likes it. NG, I'll do it at your convenience. And
There are
I'll throw, Go ahead.
There are two kinds of people in this world. People
What?
that will definitely not get the deal now, and people that will and people that will definitely want to take the deal.
It's optional. You can still take the deal without the song. It's just if you want, and you can record it and market it, do whatever you want with it. All right, go ahead, guys.
Perfect.
Cool.
All right.
Okay. That's funny. Today, the main thing again, we're just grinding, waiting for the FOMC tomorrow. We did say this, I did write this in the chat room first thing this morning. I said, look, I think we're just going to grind until tomorrow, and nothing, well, obviously, if nothing else major happens, we just keep going. The question is, what does the FOMC do tomorrow? Everybody seems convinced that they're going to do more of everything and be more dovish and sell the dollar. You're going to make money for sure. One thing I know for a fact is that there is no such thing as a sure thing. And when everybody's singing the same song, you kind of want to go the other way, at least in the short term. So I think risk reward, I've said this before, I am bearish the dollar in the medium term, but risk reward, I think, is probably decent levels to be, to be going the other way. We did have some data today. We had actually US, where is the Empire State, New York Empire State Manufacturing beat by a long way. People are still saying data doesn't count. Yes, we have bigger things in our minds at the moment, but still, we're from 3.7 up to 17. It's a big jump, and definitely something that, it's still a manufacturing index, so it does represent something real. And is something that will eventually, cumulatively, all these little pieces of data are going to be taken together and maybe, affect the Fed or, the way things go forward with monetary policy. We had ZEW out of Germany. This beat as well. So continuing with the pattern of better than expected prints, although we're still way below levels pre-COVID, but things are definitely not, well, they're not coming in worse than expected. That's a good start. We had average earnings from the UK, came in at -1%, expected -1.3%, so better there. Claimant count, unemployment claims, better than expected. Chinese data, better than expected. It's just a whole trend at the moment. Obviously, we're going to see what happens when more and more COVID-related lockdowns, partial or full or whatever, as they're gonna affect the economies for sure. But we wait and see. What else? UK. It's about time we started talking about the UK again, right? We'd forgotten about Brexit for a few months. So the members of Parliament in the UK, they backed this new bill brought by Boris Johnson, which effectively is trying to change the agreement, the separation agreement, or however you want to call it, between the EU and the UK. They backed it by a margin of around 80 votes, if I recall. So this is seems to be going forward. There's a lot of reaction from both sides. Former prime ministers, conservative prime ministers, are very vocal, being against it. So this is something that Boris Johnson is trying to push and is pushing. The question remains to see what effect it will have, if any. And we did say this yesterday. It seems like the only way to really get something done with the Europeans is to actually play hardball and show that, look, there is no other way. Take it or leave it. That's what Boris Johnson is doing. Is it going to work? I don't know. But it seems that this is really the only way to get something done. So that's what...
I guess we'll soon find out.
Yes, we will. And remember, the deadline is end of the year, but really for it to be ratified, should be done by October. Really, we have a month or so. So things are going to start escalating for sure. And what else? Really, otherwise, there's been very little. Metal is still going strong. I have a quarter of my position in silver left. I think I'm going to let it go around in the low 30s if we get there, like 32, 33, depending on price action.
It's a good first area after a breakout from this triangle.
Yes,
I agree.
But I still think that we will see some kind of spike lower in metal, spike higher in dollar, maybe spike lower in equities. I must sound crazy for saying this, but I do think there is a good chance that we might see something. What's going to be the trigger? Again, I don't know. Just like we were saying, Steve, remember last year, December, we're saying, look, there has to be some kind of correction. What's going to be the trigger? We don't know. Well, we got the trigger in March, that's for sure.
That was not just the trigger, it was the whole weapon.
Yep, absolutely.
Bazooka, actually.
Yeah. And obviously this time around, the world is a lot better prepared for, second waves of COVID and all that. And we keep getting headlines about vaccines being ready or being nearly ready and all that. Well, until something is there firm, we know that's working, then there's going to be a big question mark over everything. So I'm going to be cautious until then.
Yeah, and the market remains in a bullish mood, though, undeniably. I mean, just by comparing, what was it, the day before yesterday, that we got the news that Moderna's vaccine is being put on hold temporarily, and the market like barely moved based on that news. And then you get like anything positive having to do with the development of a vaccine, and the market finds it as a decent excuse to rally like 1.5 to 2% per day. So it's more than clear that this market is more than willing and ready to react positively than negatively to whatever comes our way. So people must be cognitive of that, because all the inflation and the monetary expansion that central banks have been creating, in essence, generates this effect, this let's call it buoyancy.
Absolutely. And there is good reason for that. When you increase monetary supply and you have such a loose policy and you put trillions upon trillions onto the market, then obviously anything indexed to inflation, which is pretty much everything, is going to rise eventually. And I do think that we're going to see a lot higher prices in everything, indices, precious metals, rare cars, you name it, everything's going higher. The question is, how is it going to get there?
It's a double whammy. First of all, they remove the options that prudent investors have in receiving anything that resembles a yield. And then they also de-risk anything that should be high yielding by guaranteeing and buying it themselves. So it's a double whammy, and that's why it's a given that when this thing comes to an end, whenever that is, it's going to be a spectacle.
Yeah, and the problem that the central banks don't get is that, or they get it, but they just choose to ignore it, is that all these assets that they're inflating, equities, bonds, they're held by not a big percentage of people. So I think I read somewhere that 80% of equities and bonds in the US are held by, 10% of people. So
something like that.
It's not really trickling down if that's what they want to do. So that's why you get people are so frustrated, unrest everywhere. It makes sense, the gap is growing.
One of the reasons, the whole concept of the trickle down effect is not a fallacy. It's not a wrong concept as a general rule, but it is completely idiotic when you target such a small segment of the population, simply because if you make sure that people that have, let's say, 200 million and above double or triple their fortune, these people is not that they're going to start spending more. They already have what they want.
Yeah, they're gonna get like a bigger yacht or something like that, but really it's not gonna affect the broad economy.
Yes, exactly. So that's why if you're in essence injecting all this liquidity at such a small percentage of the population at the top, in such a case there is really almost no trickle down effect.
Yeah, I agree, and you could argue, I've said this before, I think QE and ZIRP is actually deflationary because it reduces disposable income, the net disposable income of the average person. Because rents go up, education, healthcare goes up, everything goes up. Anyway, it's a long discussion.
Yes, but we've already seen this shift towards UBI, universal basic income, and if to keep the tensions lower, they try to do this on an extended and mass scale. It's going to have the opposite effect. It's actually going to be extremely inflationary. And they're not equipped to handle something like that. Anyhow, anything else, Celia, before we jump on the charts?
That's it, my friend.
Okay, cool. So we have the second consecutive day of a positive reaction to the losses that we previously had. But having said that, nothing has really substantially changed here in the case of the Nasdaq. I can still see this as a potential consolidation after this first leg higher. So I would still think that there is a very decent probability of one more leg to the downside, before we can start looking for upside targets once again. I don't think it's a good idea trying to think of this as something that's already done. I'm not saying that it's impossible. The general trend undeniably remains to be to the upside. But I'm just saying that I don't think it's a good idea to chase here. I think we might see a failure. I'm still monitoring this broken channel trend line support might act once again as a resistance. It already did a couple of times. So that's having to do with risk assets. That's currently where I'm mostly focused on. Secondarily, you can also have a look at what's happening with the FANGs. The FANGs did break last week through this ascending channel. Now, I'm zooming out so you can actually see the big picture here, which is, an amazing uptrend. So we did break down last week. We did backtest the broken channels trendline support as resistance. And as you see, despite the rebound that we had yesterday, so far there is no real recovery here in the FANG stocks. And we know how important they are for the market. So that's another thing I'm paying close attention to. Now, having to do with the VIX, we can have both a look at the VIX and the VXN, which is the equivalent volatility index for the NASDAQ. We did see a spike higher. We said that we would be targeting 40 to 45. We almost made it at 40. And we're now seeing a decompression of, this move. But once again, I have to say that, I see a lot of divergences here, and I wouldn't really be shorting the VIX. I think it's a very dangerous trade, especially ahead of the elections. Here is also the VXN. VXN actually got on a daily closing basis. It never managed to close above this ascending channel. It got rejected from there in three consecutive days. It did make it intraday though to this previous support resistance area at 47.70. So that's quite interesting. We're now approaching the confluence of the 50 and the 200 DMA. Now, the DAX, for example, has a different structure here. The DAX didn't really display a breakdown as we saw in the NASDAQ or in the S&P, but it's still coiling in, this can be an ascending wedge. I'm not really pleased with the angle of appreciation because, the less steep the angle, the higher the probability that it might break to the upside actually and continue higher. So that's something I'm paying attention to, but still, regardless, we're coiling in here. So that more or less concludes a general outlook of the main indices. Now, having to do with the metals, we said yesterday that gold was testing. Sorry, here it is. That gold was testing the trendline resistance. It actually closed above it. We continue to push higher today. Pay close attention to this 1980 area. I think it's a very key level having to do with, opening up, in essence, a lot more upside. I think that above 1980, there is a very, very good chance that gold is going to be pushing for a new all-time high, in which case I would be looking towards the 2160 area. That's where we have the 127% extension from the move that we had from the all-time high, when it was an all-time high in 2011, to the low that we actually found in 2015. So I think that might be an attractive upside target once we clear 1980. Now, having to do with silver, silver did hold the triangle support. It's currently more or less in the middle of the triangle. This looks more and more to me as a bullish consolidation. A break above, like, what is it, 2830, let's say, is more or less going to give us confirmation, in which case I think 3160 is the first upside target, 3250, almost 34 afterwards, and $35 is a very key area because it's the 61.8% fib from the 2011 high to the low that we actually had this year in March. And I honestly believe that silver can definitely make it to 35. I actually think that eventually it's going to, make it to producing a higher high meaning above the double top at $50. It's been a Ponzi scheme at the expense of the average person on Main Street and you. Yeah, I mean, it is. Mostly, it's a huge wealth transfer from future generations to current generations that has been going for, I'd say, like 3 generations, but it's getting worse and worse, you know, for every decade that passes. Okay, Dale, are you with us?
Yep. No, I'm gone a lot.
So
We have a guest.
tell me if we have any questions. We still have 5 minutes.
Eurocad, if you have time to look at it.
Yeah. Who's your guest, by the way, today?
New guest, Edward Dowd.
Okay. So Eurocad, we spoke about Eurocad a few days ago when I said that this looks like an interesting formation that looks to be breaking to the upside. I'm not very enthusiastic having to do with the momentum of the move, but nevertheless, you know, this is a legitimate breakout so far. So, you know, we had this discussion when we were actually testing the breakout area. And, you know, if somebody took this, I mean, you're in the money currently, so you're in a pleasant position to be able to, you know, in essence, manage your trade from a position of strength. I think there is a good chance we can make it once again towards like 159.50. Bitcoin and not,
INR.
yeah?
USD INR.
Sure. So here is USD INR. USD INR did break through this triangle the other day. We are seeing a recovery, but I wouldn't be surprised if this recovery is just, you know, a corrective consolidation, something like this. So I would have to say pay close attention to the triangle's broken trendline support. It might act as a resistance. As long as we trade below it, I think there's a good chance that you're going to see more weakness. We also have questions from what I see for Bitcoin. So Bitcoin seems to be recovering. I'm not sure yet. It looks to me like it might be just an equivalent formation like the one we're just looking at, USD INR, and you know you'll find something equivalent to many currency pairs that are dollar denominated. So you know, I think resistance is roughly at 11,150. Below it, there is a good chance that we're going to see one more leg lower to retest the long-term broken trend line, this time as support before we move higher. So I do think the path of least resistance is higher. I do think that the trend is higher at the moment, but I also think that we might continue this trend once we get one more move to the downside. That would also you know, fit the theory that we might see one more leg lower within the next few days in indices, because we saw how well correlated, especially in weakness, cryptocurrencies are, you know, especially you know, in comparison to the Nasdaq. So you know, I think that's how it might work out. We might see one more sell-off in both cryptocurrencies and stock indices, and then we might see the upside continue.
Did you cover natural gas?
No, not today. Here it is. So natural gas. I've said many times that as long as we trade above 205, there is a decent chance that this is going to prove to be a corrective pullback. And I've also said that I'll probably get involved once again. I mean, I made very good money in very few days to the upside once we got that breakout. I'm more than willing to buy natural gas once again, as long as we break through this descending channel. Now, until that happens, I don't see any real reason why you would want to jump on it. But buying a breakout for a move towards like $2.9 looks, like a very decent proposition to me. So that's what I think about it. And by the way, one thing I didn't cover, but is on the move, we talked about it yesterday, is platinum. So platinum has broken, as we were saying yesterday, has broken through this corrective formation. And so far, yesterday's and today's price action, are showing really good signs having to do with, continuing to the upside. I think that this time around, platinum will very likely tag the previous high at 1,041. Okay, so
Unless
we're
you want to
exactly
go to grains and coffee and corn, you're getting to questions on commodities, but it's
more
top
than
of
happy
the
to have
hour.
more than happy to have a look at them tomorrow, since we're at the top of the hour. Is your guest here? Have you had a look?
Yeah, Edward's here.
Okay, let's unmute him and see if everything works correctly.
Okay, and I just have one response to, I think it's Marlise Bueller. Hi, Marlise. I've never interviewed Harrison White. You're an ambassador of FACE. Invite him. Let me know if he's interested. Thank you for the suggestion. Okay. Edward, gonna get you, whoops, I hit the wrong one. I'm promoting you to panelist now. There you are.
Can you hear me?
Welcome to FACE, Edward. Nice to meet you.
Excellent.
You're loud and clear. Have you ever used Zoom before?
A couple times, but I'm not very.
Okay. All right. To share your screen, there's a little green box that share screen on the drop-down menu, and that way we could see your setup, and a picture speaks 1,000 words.
Okay.
See it?
No, I'm not seeing it, but it's the feedback on my speakers. How do I get rid of the feedback?
It's from your end, not from us.
Hey, sorry, what did he ask?
How he gets rid of the feedback.
Yeah,
clear to me.
That's from your end. It's not from our end.
Yeah.
Okay.
See, I'm not hearing any feedback now.
If you're using speakers, that might be part of the problem, because your microphone just captures the sound from your speakers and then, creates this feedback loop.
All right. Can you hear me now?
Yeah.
Yes.
Heard you before.
Okay. I don't have the feedback anymore, so that's good.
All right, great. Do you see the green box? It's on the drop-down menu. Just hover your mouse above it. Green box says share screen.
I don't see that. Well,
Move your mouse around the top. It's a drop-down menu. It'll say share screen, green box.
Wait a second, Dale. I see you've promoted an Edward that is muted, so how can he speak to us? Yeah, he can't share because you haven't promoted him as a panelist, that's why.
Oh my God.
And you've promoted the wrong person, that's why he can't see it. Now he will be able to share. Okay.
all right.
Edward, you should have this button now.
Okay. I have a share screen at the bottom.
Yes.
Yeah.
Okay. All right. Can you see that screen?
No, you'll get a second window Once you click share screen, you'll get a second window which will ask you what you want to share. And unless you also choose that, there's no screen sharing. There you go. Now something's coming up.
Okay.
Yep.
All right.
Now we can see you.
Okay.
Okay, Edward.
You see the
Okay,
long
so yeah.
It's a 288 minute and 480 minute.
Okay, why don't we start with a little bit about your journey in the business and how you ended up doing what you're doing now. How did you start?
Sure. So I started off in the early 90s as a institutional bond salesman for HSBC in Chicago. You know, I was a young man out of college and I got a job and learned about the credit markets and how the world really works in finance. And basically wanted to get into equity. So I went back to business school, went to the sell side at DLJ in the late 90s, was an electric utility research analyst. That was interesting times. That was the dot-com bubble, but I was doing electric utilities on the sell side. And interestingly enough, I got a job right at the peak of the bubble on the buy side up in Boston for a firm, Independence Investments, where I was a tech analyst. And because of my suspicion of what was going on, I was able to help my firm avoid a lot of the damage in the tech bubble. And then because of that, I was able to swing into a portfolio management job at BlackRock.
Nice.
In the early 2000s, and ran a large cap growth fund for 10 years. We took the product from 2 billion to 15 billion. We were able to cobble together a great track record. We did well in the financial crisis. We were one of the only large cap growth managers to, on a relative basis, because it was long only money. We outperformed on the way down, and then we made the turn in 09 and got bullish. And then we gathered a lot of assets. But then BlackRock decided in their wisdom that they wanted to go to passives, so they started to realign everything. I quit the firm, and my now ex-wife wanted to move out to Hawaii. She's Japanese, so we moved to Maui. And I tried to start a hedge fund here with some friends from BlackRock. We weren't able to raise any capital, but we did raise some operating capital. We had a good track record, but we basically ran out of time. One of my partners had to go get a job, and we caught the turn in 2018 in a bunch of different asset classes. It was a global macro hedge fund. I was the equity guy. And then since then,
you ever blow up one of your own accounts?
No. I did trade. So one of my best learning experiences is personally, I lost a lot of money in 2016. I was short in January, and then I stayed short in the rebound in 2016 because I was not as respectful of central bank balance sheet expansion as I am now.
Oh, welcome to the club.
Yes. So I made a costly error. I still have some capital to trade, but 2016 was not a fun year. And so I've been basically trading my own money. I've been working with, consulting with the guy, Peter Campbell, who runs a small hedge fund, S&P futures, long short. And he's provided me with some of his trading software. So he and I work together a lot, and I basically make a living on Maui day trading and taking swing shorts and longs, S&P futures and options. And
so you stayed in Hawaii after the divorce?
Yes, correct.
All right. Well, she at least led you to a nice destination, huh?
It's not a bad place to be. Not a bad place to
be. People dream of it. So let me ask you, what is your thing with Tesla deaths? I went to your Twitter box, and then.
So look,
I know a lot of shorts are dead, but you seem to be focused on the actual cars and all the mishaps that have happened with Tesla.
Well, so Tesla's an interesting stock. So I was shorted for a spell, but then when it started doing its blow off top, I've learned to respect technicals because, one thing I should talk about is one of my new belief systems is that the market structure's changed. All right. So when I was, starting my career, fundamental guys were the price setters in equities. And fundamental guys are only 10, 12% of the daily volume. Most of the volume is systematic, and CTAs. So fundamental guys no longer set the marginal price. Okay. So when you're making a bet on a stock fundamentally, you have to respect the technicals, and when they start going against you, no matter what your belief system, get out of the way. So I was not taken out to the woodshed on the Tesla bull run. I did make a little bit of money going long, but I'm so disgusted by what I see fundamentally in Tesla, and there is fraud there. Whether it ever comes out anytime soon, that the chart will tell me. I'm not going to front run it, and Tesla,
do you know if Chanos is still short? I haven't seen him on CNBC for a while.
He's still short, but he's a savvy guy. He's got lots of long, so he offset. He goes long other crap companies that are not as bad as he thinks Tesla is. So he may be losing some money in that position, but his overall
some I think has been short from 3 figures.
Yeah,
$300. So
but
before pre-split.
But so my fundamental belief is that the Tesla car is poor quality. There's really not a ton of demand out there. Elon uses tax credits to pump demand.
Yeah.
When tax credits go away, the demand drops off for these electric vehicles. So the last leg of his story was his expansion in China. The latest indications are that they're already starting to export cars from China, which is an indication that demand in China is not that great. So, demand in the US has peaked and rolled over. Demand in Europe has peaked and rolled over. So the last leg of his story and the big blow-off move was the China story. So we'll see. You guys earlier were talking about the FANG stocks putting in maybe a very important top. I'm monitoring that. I think, I was listening to you guys earlier. I do think that the equity markets have put in an important, I'm not going to say it's the top, but they put in what I follow cycles. So, potentially an intermediate cycle top, and there may be some more downside after some consolidation here. But again, like you guys have been talking about, and everyone's been talking about, you're fighting Fed and European central bank liquidity and Japanese liquidity. So it's this uncomfortable position. If you're short, you don't want to be short for too long, and you want to be very tactical. And when you think there's
it seems like it could only be a scalp or a swing. You can't position yourself short. At least they're getting guys like us to give up on position trading short and just taking scalps out on quick declines and not marrying the position. What do you think the Fed, since you have a new awareness of balance sheets, what do you think the Fed is going to offer the markets tomorrow? More of the same or anything different?
I think they're going to be on hold, and I think they've done what they've done. They want to, they're always reactive. So I think they're going to, and I think the dollar's at an interesting position. I was listening to Blake, and I follow. I don't trade the dollar, but I follow the dollar because I cross asset class awareness. If you're trading the S&P 500 is very important, and usually big inflection points come when different asset classes all kind of come to their natural bottoms and tops. And the dollar may be putting in, at least in the short term, an intermediate term low. It's consolidating. It's very, the RSI on it is showing lots of divergences. And like Blake said, and I believe as well, if we get over 94, that's going to cause the equity markets to sell off quite nicely. Whether that happens this week or next week, I don't know, but I'm watching it. And I do think more leg down in the NASDAQ and the S&P, then it'll bottom, and then we get a rally. Now, from that rally, we either go to new highs or fail, and then this thing breaks down. But I'm not going to tell you what's going to happen. That's the setup. Get a correction, then a rally. And if the rally doesn't go to new highs and breaks down from there, then the Fed then may have to come back and then put more bullets in, but they'll be reactive. the markets will go down 15, 20% before they react. So this election is very interesting. Lots of volatility is coming up. So if you're a two-way trader, it's exciting. And you know, my opinion on the election is, and again, I'm not going to make any comments whether you support Trump or hate Trump or support Biden. I try to get it right. I don't care what the I'm not gonna be political here, but I will say what I'm seeing is you have a similar dynamic to 2016. The media is telling you Biden. I'm seeing internal polls from friends who are consultants to both sides of the aisle that Trump is going to win in a landslide as of today. If the election were held today, Trump's going to win. Yeah.
So both popular and electoral, because I've heard, you know, that it could be similar in that Biden could win the popular vote and lose the electoral college. But you're talking landslide. That's
I'm talking
first time
landslide.
I've heard that.
Yeah, and you know, look, there's just like in 2016, I predicted back then on Twitter that Trump was going to win. Everyone thought I was insane, and you know, I've come to the conclusion these polls are garbage. They're not. There's a bias. We all know that the mainstream media is in the tank for Biden, and that's just a fact. I don't care to debate that. And you know, these polls are used to gaslight people and to affect turnout. And if you look at the rallies, Trump's rallies are huge. There's no one showing up for any Biden rallies. The social media views when Trump has a rally are off the charts. When Biden speaks, there's no one watching. So there's this kind of this kabuki theater trying to bring Biden over the finish line. And I also do know that there's something brewing in the next week or two where someone is potentially going to come out with some shocking medical information on Biden, and there may be a news cycle created. So pay attention to that. There's going to be
what's the October surprise going to be?
Oh, the October surprise! They pulled forward some of them because Biden is so down in the polls. He's come out of his basement and he's trying to take back the narrative from Trump. Trump's narrative about the riots is really affecting women voters. Women want their families to be safe. And anecdotally, a lot of people on Hawaii this is a liberal blue state, as blue as they come. And
okay. Like California.
Yeah, the shutdown here has really affected small businesses and people's ability to earn a living. And most people don't care about politics. They just want to earn a living, raise a family, and save some money. And the worm is turning. I mean, Oahu is locked down the city for another 2 weeks. There's rumors they're going to extend the lockdown, and it's become political at this point. There's really no medical reason to keep it. I mean, Hawaii has some of the lowest cases of COVID in the country, and we're starting to see Trump rallies on Maui and Oahu with local Hawaiians, who are supporting Trump. So this is a blue state, and if that's any indication of what's going on across the country, there's an anger brewing and a backlash against these lockdowns, against the inability to earn a living.
Okay, well, let's get to a money question based upon your prediction. So in 2016, when Trump won, the S&P's open limit down.
Yep.
And then Carl Icahn went home and bought $1 billion worth of futures, and by the morning they were unchanged, and that turned out to be a very significant low. So if you're right, should people get long in front of the election? And we're not going to know election night, are we?
No. So
okay. We won't. Who knows? One will know, right? So
right.
Would you want to be long the market into the result? And then maybe the opposite happens as re-election puts in, instead of an important low like 2016, maybe an important high?
Yeah, so the current wisdom amongst my friends who manage billions of dollars in New York and California and the retail folks the newly anointed day traders on Maui that I talked to, everyone is under the impression that we're good to go until the end of October, right before the election. I think what we're seeing now is a shakeout And I do think we're going to maybe, continue to go after we put in this little counter trend rally here. We're going to go lower and put in a bottom sometime in the next week or two, then begin to rally into the election potentially. And then that's where you want to think about putting on some shorts, because like you just said, Trump wins in a landslide, but it's going to be contested. They're going to claim he cheated. You can see the Democrats are setting up narratives that Trump is cheating, and those are going into the. You can see them into the Democratic friendly media outposts. So on election night, there's going to be maximum uncertainty, no matter what, whether or not you believe Trump won or not. It's going to be contested. Biden's already hired hundreds of lawyers to contest the election, no matter what. So on election night, Trump it'll show that Trump wins, but half the country won't accept it. And so there's going to be this maximum uncertainty. So
because isn't that because of mail-in votes that Trump has claimed is going to be fraud anyway? So I've heard that he could win on election day because his supporters are going to go to the polls, so he'll have the numbers then, and then Biden's numbers come in through the mail. When are we going to even have a transition of power, and how long will it take, you think?
Well, I think personally, I think it's going to be a SHIT show going into, right after. I think November is going to be maximum volatility, and it's going to be an opportunity for traders
on the streets or in the market.
Both.
Okay.
Yeah. So I think it's going to be an opportunity for two-way trading. Again, maybe a bias short into the once we get a bounce going in the next week or two. So I think we go lower. I don't think we break 50, kind of hold there, then rally, come up short.
3,200 looks like a big area to me in the S&Ps that we need to hold during corrections. You have any bull bear lines in the sand that you're paying attention to here?
Edward? Look, when you have sell-offs like this, it can get sloppy and it can look like things are going to break down. But 3250 to 3150, in and around there, if we start putting in divergences, then we're probably going to rally. And I'm looking for that low in the next week. We got OPEX this Friday, and as you know, the market makers try to hold the market up as long as possible into OPEX.
What is that momentum tool that you're using? It changes colors from yellow to red. What is that? And then on the bottom, what is that? It looks like a bunch of bands overlaid on the charts. Are these triggers?
These are longer term charts. This is the 488 and the 288. This my friend's computer models trigger resistance and support. So on the longer time frames, we're consolidating a little bit, and we think our bias is that we're going to break down 3,300 and scare people, and then that's where we have a rundown to 3,150, 3,250 in that band, and then things consolidate, and then we rip into the election. But those are price oscillators. Let me put up another chart, a shorter time frame. 60 minute and the 135. All right, that's the 60 minute and the 135 down below. Right now, we're doing a counter trend rally off what looked like a nice double bottom. I think, watch today and tomorrow, 2416 in the cash S&P. That was kind of when we broke that down, that's when some selling kind of came in. So we're back testing the 2416 cash in the S&P. That's where a lot of CTAs have trigger points for selling and buying. So if we can't break above that, I think we're going to take another leg down. If we do and we hold that as support, I'll get bullish. I'm not religious about these things, Dale.
Okay.
But my expectation is this is kind of a pause before another leg down. We got to put in a low, maybe depending upon where we end up this week or next week, this week or next. Then we have we rally into election day. It's probably a slow grind up, and then from there you can see a lot of volatility. But again, I have strong opinions loosely held based on technicals. I've learned not to be too religious about my positions and my opinions when I see levels that I thought would break or hold. When I'm wrong, I cut my losses and go the other way. So I'm not religious. I like to make money. So, but that's my expectation for now. Is that we're going to get a nice low here before the election. Because the expectations, as I said, everyone thinks we're good to go until the election. So a lot of people will be shaken out of their positions into this low. Then we'll rally, and a lot of people will probably put positions back on right before the election, and then we're going to get civil unrest and market unrest.
Okay. Are you interested in having more followers on Twitter? And do you do anything to help traders out, teach, or provide analysis? Do you have a business model besides trading your own account?
No, I don't. I do not. I don't try to. I'm not one who's going to try to get subscribers and that kind of thing. I tweet I'll tweet what I see in the market. I sometimes, if I have a strong conviction, I'll say that. I just don't, because as you know, look, trading is a difficult profession, and I'll put a position on, and if I find out I'm wrong an hour later, and I don't like to like get people in, follow me, and then
I understand.
It's just
it's tough. It's tough to feel responsible for other people's losses. Easier to deal with your own. So I appreciate you coming on, and some interesting and things I've never heard of in regards to the election. You're the first person talking Trump landslide.
And again, I'm not saying. Look, if I thought he was going to lose, I would tell you that. Again, this is not coming from political beliefs. This is me using the real data, not what we're seeing in the mainstream media. And I want to get it right. I really don't. If I thought he was going to lose, I would tell you.
Do you feel the same way after maybe a little bit of Maui Wowie?
I do not participate in Maui.
Okay, I thought it might be medical. Anyway, so really nice to meet you, buddy. Now my trading warrior brother, Edward. Really, thank you for taking some time out and sharing your views on the markets and all this crazy political stuff that's happening here in our country. So
no, it's insanity, and Dale, I'm sure you share the same view that I do. That it's becoming just absolutely, untenable to even have conversations with people. So I tend not to want to even talk to people about it because it's just not pleasant. And with most of the people I know on Maui, they have strong opinions, and I don't share my opinion with them that I think Trump's going to win because it makes them mad. So I just I'm sharing with people in the markets because most traders really don't care. They want to make money. So I'm just giving my viewpoint of what I think is going to happen. And if in the next week or two I start thinking Trump's wrong, I'll put that on Twitter. Trump's going to lose, I'll put that on Twitter. But what I'm seeing now is landslide electorally and popular vote. But it doesn't matter. It's still going to be contested.
There are going to be a lot of people on suicide watch. I really appreciate meeting you, Edward, and wish you good luck in your personal trading and any endeavor that you seek out going into this fall trading season. Thank you, buddy.
Oh, thank you. And I enjoyed our conversation, and be well, Dale.
Thank you very much. Edward Dowd, everybody. I posted his Twitter handle in chat. That's a wrap for Turnaround Tuesday. Let me just take a quick look at things here. Yeah, the euro faded. Yen still under pressure. And let's just see here. Silver, if you took it, we're trading 27.50. It's now 27.33. So the high was 60 at a 10-cent drawdown. You have 18 cents right here. Book half at least. Trail your stop to BE and be out before the Fed announcement tomorrow. And remember, don't just count your pips, count your blessings, and see everyone tomorrow. Adios. Scroll back on that, Alexander. Edward Dowd, it's his hand. You're welcome, Richard.